Hey guys, welcome back. We have a lot to discuss in today's video. We're going to be discussing Nebius as well as a potential AI bubble. We are going to recap Rubrik's earnings report as well as talk about my personal top 4 stocks to buy right now. Before we get into the video, if you guys could hit the like button and subscribe, it would really help me out as I'm trying to grow this channel. And without further ado, let's get into the video. So first up, we're going to have Emmanuel Macron, the president of France, and he put out a tweet on X saying Nebius chooses France. The AI cloud player unveils a project exceeding 8 billion euros in investment to deploy cloud infrastructures and services with a target capacity of 240 megawatts, positioning the site among the continent's most powerful. Thank you. All right, so this comes after France secured a $61.7 billion dollar deal in AI-related investment commitments from both SoftBank and Nebius. And if we look at some stats from Nebius right now, let's see if we can pull that up. They finished 2025 with a ARR of 1.25 billion, which is going to be a 14 times increase over its 2024 end of year ARR. The company is projected at a ARR for the end of 2026 at 7 to 9 billion. It also expects 3.2 billion in revenue in 2026. Taking a look at this graph, if Nebius revenue does hit the $20.4 billion mark, as it says in this graph over here, as you can see, that would end up bringing its market cap to being worth well over 110 billion, trading at the sales multiple of the Nasdaq Composite Index. If we look at that, compare that to this, they really do have a lot of growth potential from the software stack, which enables customers to build AI agents, develop custom AI software, and run inference tasks, and even build their own models. And software addresses a lot of different markets that are currently ongoing, and I really think that Nebius has positioned themselves very well for the next coming years, especially as AI continues to be integrated into different companies. Take a look at the next chart. This is EPS estimates for current, next, and 2 fiscal years ahead. This chart indicates that if everything continues to develop well at Nebius, the company could trade at a premium PE, making it a buy today, as most of the growth in the stock isn't fully priced in. As you guys know, I currently do own some Nebius. Currently, I'm not buying at the current levels, as if we take a look, pull that up over here, it is trading at decent price right now. Some future growth might be priced in, so I wouldn't say it's a screaming buy right now. However, I would say it is a buy if you're not exposed to this company or the sector that it is in. All right, let's continue onwards. Okay. So I also did want to touch on Rubrik's earnings report before I got into the next thing. I'm going to pull it up on my side. If we take a look here, Rubrik earnings report, some notes pulled up. So in this earnings report, first of all, the stock was down, I think around 5 or 8% after this. So you might think, oh, it's a bad earnings report. The earnings report was good. I do think that a lot of the cybersecurity names in specific were priced to perfection going into this. They have been on a rebound over the past month. They still are down from all-time highs, but they're not cheap like some other software names were. They're still kind of at expensive valuations, but it's not really going to get much cheaper than it is. It's a very exciting sector, so for that, you're going to have to pay the price for it. So I do think the reason that the stock dropped on these earnings was because really priced in for perfection. And the earnings report itself wasn't bad. The Rubrik beat revenue, ARR, gross margin, EPS, FSF, and their contributing margin expectations. They beat all of that. They also raised their full year guidance across ARR, net ARR, and revenue EPS. The cloud ARR in Rubrik reached 89% of subscription ARR, as well as identity ARR crossed 50 million and grew 38% sequentially. Rubrik's cloud agent was fully released, and this is kind of something that was a negative for the company in the past as they were trying to develop it, but now that it's out, it's going to benefit the company, could end up being a tailwind, or it was a tailwind, could end up being one. And management also said that AI agents, Mythos, and CIO slash CISO activity are increasing and demand signals. And management has also said that hardware inflation has no impact on the demand or the sales cycles of the company. Rubrik trades at roughly 50 times this year's updated FCF guidance. So personally, I do still think that it is a buy at current prices. It is slightly expensive, as I said before, but over the past month, still up 26%, 5 days down 8%, 1 year still down 24%. And if you look off this high of 92, we're still not at that high, actually around 100, in fact, but we are on its way back up there. I do think we reach there within the next year for sure. I think we're on our way to well above 200. The rubric, yeah. All right, let's continue on. Next up. So, dot-com bubble. So if there were, you were to compare this, the current environment we are in, to the dot-com bubble, I would say that we're definitely in like 96 compared to like late 99. I don't really think that there will be a relevant AI bubble, but if you wanted to look at it from that lens, we still definitely have room to run. Uh, if we were in the bubble that everyone was saying we are in right now, like in 99 and 2000, every single company would be IPOing with .ai at the end of their name or whatever, and they'd be getting crazy valuations. And you're looking at SpaceX IPO and potential like Anthropic and all of that stuff, and you're like, oh, crazy valuations here and there. Back in the dot-com bubble, if a company just tacked on .com at the end of their name, they would be valued at billions and billions of dollars, which is just not the situation we have right now. We aren't at like the situation like 2021 either, where EV companies are IPOing with like no revenue and are being worth billions of dollars as well. You look at Lucid and other companies like that during that era. It's just not at that point. Could we get there? I mean, it's a potential. Could always get there, but currently at these current prices, we're just not there yet. So I still think we have at least another year and a half, 2 years minimum to run through this AI cycle. Could there be a downturn? So could there be a correction? Who knows? If there is, it's just a opportunity for people who haven't built out their positions completely to go buy in. Could continue dollar cost averaging up on your position, but I really do think there's a lot of room to run. No AI bubble in sight. So let's get into some stocks that I'm looking to buy during this market. And first up, we have ServiceNow, ticker symbol NOW. So the thing with ServiceNow is that the flip is happening. It it really is trading at too cheap for the growth rates that it has out of most of the SaaS companies that people talk about, like ServiceNow, Salesforce. Like ServiceNow has a higher growth rate, so that's why I did buy into this during the dip, as opposed to something like Salesforce, which has lower growth rates. I do think Salesforce still has upside, but I think ServiceNow, especially with those higher growth rates, has more potential to swing back higher on the upside. I do think that it's going back It's above 200. It's backed by leaders like Jensen, and video CEO. He's talked about ServiceNow and how it's a core AI enterprise operating system. And in the long term, I could see ServiceNow going back to around 350 to 450 in the next coming year. So I think even after this little run up it has had, I do still think that it's a buy. Rubric, I touched on this a little bit before. This graph was taken before the earnings report, so it is a bit lower. Earnings report was good. Flip is happening with profitability. It's growing very nicely. It is still a relatively new company on the public market at least, and it is a smaller player, but I think it's on its way to becoming a bigger player in the cybersecurity space. Current values, is it a buy? I would say it's a moderate buy at current valuations. If we're just looking to open into a position, it would have been better to buy like a month or two ago when it was a lot lower. It's I still do have a price target long term on it being 200 plus, but right now I do think that it's a moderate buy at least. Going on to the next company, I do have Elf Beauty, ticker symbol ELF. This is one of my bigger buys right now. I recently bought some more in my portfolio. Um, thing with Elf is they have products that really cater to everyone. They have cheap products, rich products, middle class products. Pretty much anyone can afford any one of their products. And they also do have a lot of exciting brands that they acquired. They acquired Rode and they also own Notorium. So Rode was created by Haley Beaver, and especially with the younger people, really well marketed. Lots of people like it. There are wait lists, as you can see over here, on some of the items, and wait lists for beauty products is pretty much unheard of. That's like usually for like sneakers or clothing drops and stuff. But for beauty products, you know they're doing something well with their marketing when that happens. And it is a bit more expensive, those products, but the Elf brand itself does carry a lot of the cheaper products for people who might not be able to afford Rode. Um, but it's a very hot thing in the market right now, has a lot of growth ahead for Rode. Also, they also own Notorium, which is like body wash, that's also growing really well. They also have a bunch of other smaller brands as well, but those are, I'd say, the main three that you'd want to focus on if you're investing in the company: Elf, Rode, and Notorium. But basically, they have a very good road ahead. They've set up very nicely. The tariff drama is starting to pass by. You kind of see in their reports and everything, everything is doing nice. The turnaround is happening. Price target, I'd say easily 200 plus, going back to all-time highs within the next few years. I do think it's very undervalued at around the $50 mark. Should easily be a 4x over the next coming years. I'd say you could have a compound annual growth rate on like a base case of around like 40 to 50%, which is extremely good, which is why I'm loading up on ELF shares. Lastly, we do have Celsius, and I talked about Celsius a lot in the last video, so I'm not going to go too deep into it, but it has extreme international opportunity in the coming years. Brand is still growing in the US, and the stock is really just at a crazy discount, being around $30 right now. If you look back to like years ago, in fact, let's take a look right now at the chart for Celsius. If you're going to go and look back, it's currently at 28. Look back over here, tariff drama, it was trading around the same price, maybe a little bit cheaper. But if you look over here, back in March 2023, or like even basically 2022 in November, it's trading at around the same valuation as it was. What is this, like 3.5 years ago, 4 years ago? And this is before the Alani acquisition, before the Rockstar acquisition, uh, before they got their distribution partner as well. Like, it's quite undervalued at its current price. Right now, it should be worth a minimum of $50 to $60, in my opinion, right now today. And in the long term, it could easily be worth above 100 back to all-time high. I did recently buy a lot more Celsius in my portfolio as well. If you guys do want to take a full look in depth at my portfolio, leave a comment, let me know, and I can make a video on that, reviewing everything in the portfolio. But yeah, Celsius, probably my favorite buy in the market right now. If you guys want me to review any other stocks in the market, Robinhood or even Novo Nordisk, HIMS, anything else, just leave it in the comments down below and I'll see if I can get to it. Other than that, yeah, thank you guys for watching. Be sure to leave a like and subscribe, and I'll see you guys next time. Thanks.